Welcome back. In today's video, we're going to be discussing the top crypto stocks that I think are very important for most investors to at least understand, because in this sea of information and the sea of noise, it's really important that we kind of zoom out and understand where can we make the most money, where can we diversify our investments, and which are the best investments for our portfolios. And remember, nothing I say is financial advice. These are my opinions on the market, and it's important and imperative that you do your own research before you make investment choices, and don't make investment choices based on what I say. With that, don't forget to also give the video a free thumbs up. We upload quite often since 2018. So hit that subscribe button, give the video a free thumbs up, because crypto is not free, but thumbs up are always free. So one of the biggest questions that we get asked on this channel is Cryptoviser. Where should I invest my money? And while I just said I'm not a financial advisor, and I'm definitely not your financial advisor, I kind of make these videos to give you guys my opinions and analysis on where the market is. And there's over 20,000 cryptocurrencies. I mean, we can go on for days and days and still not even understand half of these. So sometimes it's a little bit more easy to kind of ignore all the noise and understand where the money is, where the development is, and where the potential to make even more money on the money that we already have is. Because remember, what do most wealthy individuals always tell less wealthy individuals? Make your money work for you. And what does that mean? Well, let's start here with yield max ETFs. Now, I've covered this extensively on this channel. We're not going to go too deep into it, but effectively yield max ETFs, most of them are covered call option ETFs. So for instance, the Tesla option income strategy ETF, it's an ETF, exchange traded fund, where they sell covered call options, which are derivatives, kind of like gambling, and they collect a premium for selling that contract. And by selling the premium for that contract, they get to take in a certain amount of money and still can trade the market. And then every single month, YieldMax takes whatever profit they made and they distribute it amongst the shareholders. And some of these option income ETFs like COINBASE and MicroStrategy, these are very lucrative option ETFs that most people don't even know about. I mean, the CONY, which is the Coinbase Option Income ETF. Now, by the way, high level degree of risk. So I would definitely diversify portfolio and make sure that you understand the risks involved here, because there are risks. You could lose all your money in this. But with that said, look at their dividend history since the fund launched in October of 2023. The first month, $1.20 in dividend. The second month, $1.07, $2.46 the next month, $2.79 the next month, $1.07 the next month, $1.66 the next, $2.79 the next, and $2.28 in May. And so if you look at the actual cost of this ETF, it's $23.49, which means in May, basically they gave about 10% dividend in 1 month. 1 month. Most ETFs or most stocks that give dividends yearly, you're going to get between 5 and maybe 15%, usually between 5 and 10% per year. This, you're getting 10% in 1 month. Now, again, there's higher degree of risk. So the more risk, the more reward typically. And so you have to understand that. But if you get 10% every month for 12 months, you've recouped the cost of the stock in 10 months. And so from there, everything else is profit. So that's one way to look at it. But because YieldMax is so lucrative and so successful, right? And by the way, some of their ETFs, they perform very well when the stock is performing well, and other times they don't perform well. I mean, take the Tesla ETF with YieldMax. If you look at the dividend history, it's been all over the place. $2, $1.80, $1.60, $2.13, $1.15, 80 cents, 80 cents, 60 cents. So it's been actually going down, but so has the Tesla stock when I'm recording this video. And you may say, but Cryptoviser, is this a safe investment? Well, that's for you to do your own due diligence to understand whether it's safe for your investment portfolio. But if you look at the actual team, the team that they're talking about, I mean, their administrator for it is Tidal ETF Services, which is a very well-known ETF company. And you could see some of their other, team that basically oversee the ETF strategy. But now we're hearing from Eric Balkunis, who's a senior ETF analyst over at Bloomberg. He said Granite shares just filed for 25 yield boost ETFs, which seek really, really high income by trading options on volatile underlying assets like the QQQ, which is a stock that tracks the stock market, NVIDIA and Tesla, China, gold, natural gas, Bitcoin, and even volatility. This is new competition for YieldMax brand, which has grown to $2.5 billion, right? So YieldMax is, all their funds together is about $2.5 billion in assets under management. And they basically followed specific stocks, tech stocks, NVIDIA, Apple, Amazon, Meta, Google, COINBASE, as we covered, Disney, Microsoft, ExxonMobil, JP Morgan, PayPal, Moderna, AI. They also have blended ones that cover many different assets, many different stocks. So they have quite the big portfolio. But if we look at this new Granite Shares funds, you could see that they're looking to create these income ETFs through similar type funds and potentially even more. So again, more diversification, and this can help pay a monthly dividend based on the performance of these ETFs, where if you're just holding a crypto or just holding a stock and waiting for the price to go up, you could be waiting 2-3 years for the price to double if you're in an underperforming market, where, as we just covered, if you're getting 10% per month or 8% per month, by the end of the year, you already recouped your initial investment. And so these, I think, are definitely stocks that people should at least know about and look into. Whether it's right for your portfolio or not, I can't make the decision. Obviously, you have to make that decision for yourself. Maybe start off small. That's what I did, right? And, what I always say is, if they're paying really well, that doesn't mean they always will pay very well. Just like when the crypto market is moving higher and we're reaching euphoric levels, we're still going to go into a bear market at some point. And so you want to be out of that by the time that happens. Now, if you already recouped your initial investment in profit, and now you're just getting the dividend, and maybe it's significantly less, like we just showed you, the Tesla one was getting $2 and now it's getting 60 cents. But if you already recouped your initial investment and now you're just getting 60 cents of free money every month per share, that may be a good long-term hold, especially if you're thinking about retirement and longer-term type of investments. But again, I wouldn't plan on holding these type of ETFs for like a decade. I would maybe like a year or two, and then reassess. Maybe in 2 years it's going to look like it's not a good investment anymore, and then you want to pull out of it. So those are decisions you have to make on a regular basis. That's why I always say, like, you have to constantly be reevaluating your portfolio, because in a sea of information, in a sea of cryptos and different stocks, where do I invest? Right? This is why I'm constantly, from 1 year to the next. A lot of people watch my videos and they say, Cryptoviser, I thought that you don't hold that stock. I thought you don't hold that crypto. I thought you sold that. I thought you bought that. It's like, yeah, but that's what I was doing previously. That's not what I'm doing now. And any good investor is constantly reevaluating their portfolio. And if it's time to make a move, it's time to make a move. Right before the FTX collapse, I made a video on my channel saying I was selling into losses. That way I can shore up liquidity in case the market did fall, and then I could buy up the market. And people were in the comments saying, Cryptoviser, why would you sell into a loss? I'll never take a loss. You just hold it until it gets into the green. Well, just a few weeks after that video, what happened? FTX collapsed, and guess who was buying the market? Your boy. While everybody else was freaking out about, is Binance going down? Is FTX, what's next after FTX? Is Bitcoin going to go to zero? We were buying the market. We were buying the market. And so you constantly have to reassess, maybe not every day, maybe not every week, but at least every month or every quarter, reassess what the portfolio looks like, reassess what the market looks like, and then make decisions. Do you do nothing? Do you add? Do you remove some from your portfolio? Do you go to cash? You know, because the market changes. And so your opinions on the market should change as well. And that, I believe, is what good investments look like. So that's yield max and yield boost. Once these actually do launch, I'll do a full video on them and maybe like a month or two after they launch. That way we can see what their performance looks like. Because while some people will jump into these and say, oh yeah, I'm going to buy these new ETFs if they're income dividend on a monthly basis, but maybe they're not going to perform that well. So I want to see like what a month or two look like before I actually go in there and invest. But besides just these yield max and yield boost ETFs, what other area of the market is kind of cutting through the noise and what I think is going to do extremely well this cycle? Well, none other than the Bitcoin ETFs. Bitcoin's mining ETFs. So we just heard Bitfarms was rejected an acquisition offer from Riot Platforms. Riot Platforms is the second largest Bitcoin mining company in the United States. We're going to come back to Core Scientific in a minute, so let's leave that open. But let's show you guys Riot Platforms. Riot Platforms right now, when I'm recording the video, in basically the middle of 2024 is $3 billion, right? Marathon Digital, on the other hand, this is the largest Bitcoin mining company, $6.1 billion, okay? So Riot Platforms wanted to buy Bitfarms, and they offered Bitfarms $2.30 per share. Let me pull this back so you guys can see the price action in 2024. In February of 2024, the price was $3.60, almost $4 a share. And so Riot Platforms offered Bitfarms $2.30 to buy the whole company. Well, Bitfarms said, no thanks. Bye, motherfuckers, right? I mean, why? I want to know why Riot thought that Bitfarms would let them buy the company for $2.30 a share when we were basically double that price just a few months before. But again, this is noise. This is noise, because even if they were offering higher price, I don't think that Bitfarms would sell. Bitfarms, from my understanding of Bitfarms, they're not in a bad position financially. They're not in a bad position from a mining perspective. Maybe there was some shakeups in the company recently, but nothing crazy. So the fact that Riot wants to buy Bitfarms, number one, I think that they wanted to get to a similar market cap to Marathon Digital, but also this is a very easy way to increase their hash rate, increase their Bitcoin mining capacity. Rather than building out, right, and buying new machines, building the infrastructure and all of that. It's way easier just to buy the company. But as a shareholder of Bitfarms myself, $2.30 is an insult. But it tells me that Bitfarms is obviously a good company because they want to acquire it. They wouldn't, there's so many other Bitcoin mining companies. I mean, I can't even list them all because there's so many. There's so many Bitcoin mining companies that they chose Bitfarms, which means they understand this is one of the larger ones. This is probably the easiest to acquire in a bull market to just operate and give us more hash rate, more income, more mining, more Bitcoin that we mine, etc. So as a shareholder, this is actually extremely bullish. I hope that they don't sell personally, because I think that most of the large Bitcoin mining companies over $500 million in market cap, they don't need to sell. We're in a bull market now, right? We're in the post-halving period. How long the bull market goes on for, how high the bull market goes for, I don't know. But I just know that these Bitcoin mining companies, as the price of Bitcoin goes up, these are going to do much, much better. And Bitcoin mining companies are the best positioned type of industry to pivot into AI as well. Because AI needs large data centers that can handle a lot of electricity consumption, that basically these Bitcoin mining companies, that's what they do. And we're already seeing a lot of these Bitcoin mining companies pivoting to AI as well as Bitcoin mining. So they're diversifying their industry as well. So Bitfarms is a company. Core Scientific is another one, right? We've been following Core Scientific since they filed bankruptcy back in 2022. The price of the stock went down to 5 cents. Now, obviously, this is the new reissued stock. The stock was reissued, I think, in the beginning of 2024, right around here, January, February. And I told my viewers that I was not holding until after the bankruptcy and until after April, because in April was the first big unlock of new shares in the new company. And so we saw a lot of kind of sideways trading since the company came out of bankruptcy through April. And you could see this is when the new shares were issued in April, the big drop in the price. And since then, Core Scientific has been going higher. And it's basically from the low, it's basically doubled already. And so Core Scientific's true market cap, in my view, is about $1.5 billion minimum. This is just based on the amount of equipment they have, what they actually mine, their business operations, and my analysis. I could be wrong on this, but that's my base market cap should be 1.5 billion at the minimum where we are today. So we still have another doubling to go till we get there. And so I am very bullish on Core Scientific. I'm very bullish on the Bitcoin mining industry. And to show you just how big this Bitcoin mining industry is getting, Fred Thiel, who is the chairman and CEO of Marathon Digital, remember, the largest Bitcoin mining company in the world and really in the US as well, $6.16 billion market cap. They have signed a historic deal to monetize underutilized energy across Kenya and jointly developing technology projects. This is a renewable energy deal with Kenya. They're going to invest $80 million into the company, into their digital infrastructure, based on this memorandum of understanding that they signed with Kenya's Ministry of Energy and Petroleum to monetize the underutilized energy and jointly develop technology projects. Marathon Digital is expected to invest $80 million for this digital infrastructure. This agreement also paves way for the use of its green data centers to optimize renewable energy projects. It's also expected to advance technological infrastructure and stimulate economic development across Kenya. So this is going to help the mining industry, and also as the AI industry continues to grow and the need for more compute data centers and electricity for these data centers, these kind of companies are going to be well positioned for it. And so whether Marathon Digital is investable at this point, that's for you to decide. I mean, Marathon Digital, again, the largest Bitcoin mining company. So Marathon is $6 billion. And if you look at Core Scientific, it's $800 million, right? $900 million. So basically it's about 6 or 7x the size. Marathon is 6 or 7x the size of Core Scientific. So in my view, Core Scientific has the higher potential to move to $6 billion than see Marathon Digital 6x to about $36 to $40 billion. This is just based on my numbers analysis. It's not really based on any metrics that are here, but this goes for a lot of these Bitcoin mining companies. We also talk about Griffin Mining as well. Griffin Mining is a very small Bitcoin mining company. Their CEO, Rob Chang, says that they mined at an average cost of $22,500 in the 12 months ending in March of 2024. So that's significantly lower than the price of Bitcoin right now. So if they're mining Bitcoin for $22,500 and the price of Bitcoin is $60,000, $70,000, they're making $50,000 per Bitcoin mined. Now, like I said, Griffin Mining is a very small Bitcoin mining company, but they're looking to acquire more companies. And Rob Chang, along with other executives at Griffin Mining, are from Riot Platforms. They're from Marathon Digital. So their executives are from the two largest Bitcoin mining companies in the US. To me, this indicates they're going to try to make Griffin Mining, they're going to try to grow it to that size again. And I think that they're probably the best positioned executives to do it. Now, whether they can pull it off or not, that's a whole different story. But, you know, again, that's part of investing, trying to figure out what is the right route and what is probably going to occur. So, you know, we're in this new era of investing, right? Ryan Rasmussen, who is a researcher at Bitwise Investments, which is one of the Bitcoin ETF issuers, and they have a lot of other crypto funds. He went 2 days in New York City to speak with hundreds of retirement investment advisors about Bitcoin. And he said clients are asking about Bitcoin and crypto exposure. Many RIAs are still in the due diligence phase. They're still in the research phase. They haven't started investing in any crypto-related stocks or just crypto themselves. Most are considering 2 to 5% allocations. Okay, they're considering it. They haven't done it yet. Some are considering up to 10%. So imagine once they start actually getting out of due diligence and going into execution phase, and they actually start to invest in these companies or directly in Bitcoin, like where is the industry going to go? I think it's going to go much higher. I think most of these retirement accounts and funds, they're going to invest in stocks that have access to that crypto, like Bitcoin ETFs or these Bitcoin mining companies, or proxy stocks like MicroStrategy or Coinbase. And so this is going to affect the whole industry. So again, outside of crypto itself, there's still opportunity to make life-changing money. And some would even argue that you're going to make that money in these derivative and proxy stocks, and they're going to perform better than the actual underlying crypto, because that's where the money is going to flow into. We're already seeing it happening. Medical device maker Semler Scientific, their stock has risen 25% after a $40 million Bitcoin investment. And so they're following MicroStrategy in this announcement that Semler Scientific, and their ticker name is SMLR, and they're, I think, a $200 million, $200 million stock, right? It's obviously gone up since the announcement that they put Bitcoin in their balance sheet. But yeah, they're now following MicroStrategy's lead, and they announced that they purchased 581 Bitcoin for an aggregate amount of $40 million. They said our Bitcoin treasury strategy and purchase of Bitcoin underscore our belief that Bitcoin is a reliable store of value and compelling investment. Bitcoin is now a major asset class with more than $1 trillion in market value. They said, we believe its unique characteristics as a scarce and finite asset that can serve as a reasonable inflation hedge and safe haven amid global instability. They said, we believe its digital architectural resilience makes it preferable to gold, which has a market cap of approximately 10 times that of Bitcoin. Given this gap in value between gold and Bitcoin, we believe that Bitcoin has the potential to generate outsized returns as it gains increasing acceptance as digital gold. So this is going to become another proxy stock for Bitcoin, where if you want to hold Bitcoin without holding Bitcoin directly, here's a company that's putting it on their balance sheet as a store of value, and they still have cash on the side to fund their operations without having to sell any of this Bitcoin. And as the value of Bitcoin rises, the value of this company, therefore, in theory, would rise as well. This is exactly what we saw with MicroStrategy. And so this is just one company out of many that I think are going to begin to move in this direction. And so again, outside of crypto directly, there's a lot of areas to look at and a lot of potential areas to make money. Because crypto is going to do well, these other companies and other funds are going to do well also, I think. And so this is where diversifying portfolio comes into play, and looking into other potential investments to make that can offset some of that risk of investing directly in a crypto or directly in a high-risk stock like Yield Max or Yield Boost. And remember, nothing I say on this channel is financial advice. It could be wrong about anything and everything that I say. So do your own research. Give this video a thumbs up. Let me know what you guys are doing down below in your portfolio. Let me know in the comments. And don't forget to hit the subscribe button. I'll see you guys on the next video. Crypto on.